In today's video, I will try to clarify a little bit the systematic operational process of the fractal flow method. A few people have requested me to make a video about this specific topic because they feel they need a step-by-step procedure or a checklist to form the context for their trades. In this video I will establish a few general guidelines that will help the students of the course organize their ideas in a more systematic way. Keep in mind that these are general guidelines only, and that each and every one of these guidelines can and should be explored in greater detail. The way I usually start to analyze the charts is by marking out the market vectors like I did in this chart with the black and blue lines. Here is the first subjective action you must take because depending on the trader, the vectors that can be considered major can vary a little bit just like the minor vectors as well. This first step should enable you to see more clearly who is in control of the market. This first step is connected with the second step, which is the identification of the hierarchy between market players. By marking out the market vectors, you should have a better idea of where powerful buyers and sellers are in the chart. For example, in this chart we have major black vectors going down. Number 2 is lower than 0, which makes 1 a solid market structure, and therefore, a good place to place a stop for example. The first green rectangle you see here is the turning point between vectors 0 through 2, and it is roughly speaking where the sellers are supposed to appear again. If price gets to the level as it did in number 3, you should move on to the third step, which is the momentum analysis of the market using the advanced types of divergence that are explained in the fractal flow method. Keep in mind that the common types of divergence are not enough to analyze the momentum of the market. Reversal divergences and hidden divergences are only the first step of momentum analysis. We must align the simple types of divergence with the concept of fractal analysis to generate the more advanced and subtle divergences that will serve as a trigger to open trades in specific areas. This third step is correlated with the previous two steps because you cannot simply use momentum analysis to trade, otherwise you will experience too many bad signals. The momentum analysis and the advanced types of divergence like the fractal reversal and the fractal hybrid must fit within the context built around the first two steps of the method. One common problem with contextual trading is that the overflow of nuances generated by candlesticks can be too overwhelming sometimes. If you experience something like that, you can try to mark out the vectors and then erase the candlesticks to see the market more clearly and in a lower resolution. Once you get the rough idea of where the market is going, you can increase the resolution of your analysis by adding the candlesticks again. The fourth step is to filter trades by their risk management attributes. That means only trading if you have a logical tight stop based on solid market structure, and enough room to produce a trade that has at least a 1:3 risk-reward ratio. There is a mathematical reason for this minimum ratio that is also explained in greater detail in the fractal flow method, but I'm not going to go into that in this video because the explanation is quite long. The red arrow you see on this chart marks a fractal candle that happened in the sell zone market by the green rectangle. That was a good place to sell because we have all four steps agreeing with each other in unison. These four steps are not the only steps you could use here of course. There are more dimensions you can add to your market analysis. One good example is the complex line work that can be done to validate our red arrow sell trade idea. One very important thing to realize here is that without keeping track of the major and minor vectors and distributing them correctly in a hierarchy, you can become confused about the general trend of the market. That's probably the hardest part of this approach. Another possible point of confusion is the possibility of a subtle flow shift like it's marked in the opposing arrows inside the blue rectangle. Notice that the second green rectangle could be a good place to sell if the market was to respect the same logic from our first trade, but apparently the sellers are not in control anymore. As you can see, you have to constantly calibrate the hierarchy between buyers and sellers. I'm not going to cover flow shifts in this video because this is a more complicated subject that requires whole books and lectures to figure out. The main idea of this video is to give the fractal flow students a general framework to build their trading ideas. If you go back and watch the other market analysis I've done in the channel, you will notice that these are the steps that I usually follow, but as I said in the beginning, each step has its own details that cannot be ignored. This is one of the reasons why I say it's hard to come up with a recipe of how to trade because things can get complicated very quickly. If we try to simplify these steps too much, we will end up ignoring a lot of important details that are critical to the understanding of the market logic. I know there is a lot of people that don't like the idea that the markets are complex, but I have to reinforce that it's not the market that needs to conform with the trader's need to simplicity. It's the trader that needs to conform with the market complexity. The market is the constant and the trader is the variable. That's part of the difficulty of being a trader. If you are constantly worried about this kind of thing, the best piece of advice I can give you is that you should try to get to the absolute bottom of how the market works and try to get used to the complexity that is inherently attached to this. If analyzing the market was completely black and white and objective, we would have figured out a way to automate trading a long time ago. However, that's not what happens in reality. Facing the complexity of the markets is the antidote to bad market analysis, and it's the true gateway to high-quality trading. When you become too overwhelmed with the overflow of information in the charts, try to remember why you became attracted to the markets in the first place. There are tremendous rewards waiting for those who are able to manage a difficult market analysis with proficiency. I hope what I'm saying here serves as some sort of inspiration for you to become a better trader, and hopefully you will be able to extract some good out of this simple video. If you enjoy the work I do in this channel, please hit the like button, subscribe to the channel and check out the other videos I posted here so far. There are many videos explaining several aspects of the market and a few different market analyses. If you have any questions about the market, don't hesitate to send me an email. Thank you for watching.